Welcome everybody back to the Bitcoin Consultant podcast. I've got my guest here, Alex McMillan. This is our second time on the show because he just loved it so much the first time. So for those of you that haven't seen the first episode already, Alex is a civil engineer. He's also a former professional bodybuilder, as you can probably tell. He's a self-described opinionated commodities bull with contrarian global macro views, and is an advocate of the Austrian School of Economics. And so the structure for today's podcast is going to be in three parts. The first section, we're going to run through what we covered in the previous episode, which was a bit on gold and the Nixon shock, where he took the US off the gold standard, the banking bail-in of Cyprus, and where we didn't get into was the debate I think people wanted to hear between Bitcoin and gold and some of those key talking points. So that's the first. The second section, we're going to do a quick update on the economy today and some of the statistics that have come out of the US, and discuss if there's any major implications on markets and maybe how you're positioning differently based on some of these changes that are happening. And then lastly, we're just going to have a bit of a broad discussion on the changing world order, to use Ray Dalio's terms. So why don't we jump into it? So
yeah, let's go.
So first section, we covered in our first interview, the topic of gold standard and the Bretton Woods Agreement. Could you just very quickly recap what that was about? And yeah.
Okay, so the gold standard, historically, gold and silver have been money, and people used to walk around with little pouches of coins in their pockets, and that's what you use for transacting day to day. For buying groceries, you use silver. For buying land and farms and houses and stuff, you'd use gold. And if you were an Egyptian pharaoh, you would have a big face mask made out of it when you die. And that's how it's been for lots of time. Throughout history, people have deviated off of gold and silver, and they've traded in other things like seashells or tulips or paper currency or whatever it is. That inevitably fails, and then they go back to gold as their main source of trading. Wow. And this is essentially what the gold standard was, is basically your money, your cash, your dollars, it was backed by gold. So you'd go to buy something, I'd give you $1, you know that you can take your dollar, trade it in, and get however much worth of gold. And the idea of the gold standard was that it was fixed. So 20 US dollars would get you 1 ounce of gold. And also $1 would get you 1 ounce of silver. So 20 silvers for 1 gold. And it stayed like that until 1932, where Roosevelt then confiscated all the gold and then revalued it at $35 an ounce. And by doing that, it meant the government now had a lot more spending power. So they don't have to be tight with their money. And then this continued until 1944, and they said, right, the Bretton Woods Agreement in New Hampshire is basically where they agreed that the US dollar will be the reserve currency of the world because, so the whole world will trade in US dollars. And at any moment in time, any foreign country could go to the US and say, there's some dollars, give me back my gold. And gold was $35 an ounce at the time. During the 50s and 60s, America went wild, spending money, sending people to the moon. They beat Ferrari with the Ford, they won the Olympics, they won the space race, they did all these cool stuff. And fighting wars in Vietnam, and the French government said, you're spending all this money, we don't think you have enough gold to back it, therefore we want to redeem our gold. So they gave back US dollars, got their gold in return. And quite rightly so, the US didn't have the money to back their gold. So as their gold reserve got smaller and smaller and smaller, because everyone's redeeming their gold, in 1971, Nixon said, enough, we're not giving back any gold. You can still transact in dollars, but we're doing this because we don't want speculators to ruin our economy. And they suspended the gold window temporarily. It's been 53 years now, and it's still suspended. I have a strong suspicion that they're going to go back to the gold reserve window.
Yeah, is it true that America still has the world's largest gold reserves, or do you think that's no longer the case?
The interesting thing about gold is that it's completely undetectable. So it's not banking system where you can say, I know exactly how much gold they have. It's not on a ledger. It's my word against yours. So technically America shouldn't have as much gold as they should, as they say, because they gave up a lot of it in pre-1971. At the same time, every time America invades a new country, that country's gold reserves seem to disappear. Mm-hmm. And they'll do funny things like, you know how like during World War II, England said, yeah, don't worry, Greece, we'll look after your marbles so they don't get damaged, and they don't give it back. Yeah. I wouldn't be surprised if the US are doing the same. Don't worry, Ukraine, we'll hold on to your gold while you're at war with Russia, but after the war, we'll give it back. They're never going to get back. Yeah. At the same time, you have countries like China, who are the biggest producers of gold, as in for mining, and the biggest importers of gold as well. And every year, or every couple of years, they're supposed to announce how much gold they've got in their reserves, but whether it's true value or true number of tons, because measured in tons and ounces, and who knows? It's anyone's guess. Mm.
And why do you think there would be a decision from any one country or a collective agreement across countries to go back to a gold standard? Obviously, I think some people think straight away gold is a lot harder to move than digital or fiat currencies. Why do you think some countries would look to readopt that?
So you only trust a fiat currency if you know you can buy something with it. I'll accept your dollar if I know that tomorrow I can go and buy something with that dollar. But because of the debasement of currency and the money printers are going off like crazy now, every country is the same. Some countries are printing money quicker. I think overall the world's losing faith. And essentially fiat currency, a dollar, all it is, or a dollar substitute, which is essentially a gold substitute because dollar was a substitute for gold. So it's like 2 or 3 derivatives deep. Essentially all it is an IOU, and if I say, yeah, I'll buy something off you, pay you in dollars, if I know those dollars aren't going to buy me anything, I don't want them. Mm-hmm. And I think the world's sharpening up to that pretty quick. So you go to some of the hyperinflating countries like Venezuela or whatever, as soon as you get paid, you try and get rid of your Bolivianos or your Argentinian pesos. You don't want to hold on to it. You buy something that's going to hold its value better. And at the moment, the US dollar is that fiat currency because it's a reserve currency of the world. But even that is still declining. So when you watch the news and they say, the DXY, which is the dollar index, right? And it says, yeah, the dollar is up, the dollar's down against the euro, the yen's crashing, as you've seen on the news. And then they're all like, if the dollar's up, great. Why can't I buy as many things with my dollar as I used to be able to? So although the dollar's up relative to euro and yen, it's still down relative to the price of milk.
The US dollar you're talking about?
All dollars.
Yep.
All currencies. Mm-hmm. They're all, imagine you're jumping out of an airplane, you're all falling. The US is just pull their parachutes, so they're falling slower. Mm-hmm. But they're all going to hit the ground and go splat soon. Yep. And I think the world is wising up to that. At the same time, what happened with Russia when they sanctioned it and they said, right, you're not using SWIFT system and all your US reserves and your treasuries are blocked. It's it's weaponized, financials. And the world saw that. Every country that owns US treasuries or US debt instruments are looking at it saying that could be us next if we don't play ball with the US. And so slowly they're all starting to release their reserves. They're selling their US treasuries and they're buying harder assets with it. So, they're all hoarding gold. Central banks across the world, at a rapid rate. Retail investors also.
But so presumably, even if it was a gold standard adopted, let's say some of the BRICS countries have discussed that they'd like to move in that direction and have a shared currency or a new currency. Do you think ultimately you'd still have a fiat currency? Just the gold would sit with somebody. Like how do you imagine that would work? And secondly, don't you think there would be risks involved? Let's say, for example, China says we'll hold everybody's gold. And we'll issue this new digital yuan for everybody to use. You can come redeem it in gold. Is it just going to be a repeat of what we've already seen and make the same mistake again?
Absolutely.
You think so?
I think it'll be a repeat. They're going to try it, of course. I think, this is what BRICS are working on at the moment. BRICS, by the way, is Brazil, Russia, India, China, and South Africa. And I think Iran's now part of it, and there's a whole bunch of other countries on a waiting list to join it. And the idea is that they're going to trade in their own commodities. So they'll trade oil for iron, and whatever the difference is, they'll settle that in gold. But again, no one trusts each other. So I imagine there'll be like either a central vault where they have a bunch of different people monitoring it, or there'll be vaults in each country, and again, there'll be individual other countries auditing how much is going in, how much is going out, does it exist? And it might last for, I don't know, a couple of decades, and then one country will get greedy, they'll find a loophole out of the system, they're going to start printing money, you're going to see, you know, how is this random country doing so well, and suddenly they're, you know, the most advanced when it comes to this technology, and they're winning the Olympics, and they're the first to land on Mars, and you know, and then they say, "Where's your gold? Don't have it."
So you know, so you envision it as like a United Nations type scenario, for gold. Okay.
I mean, they already tried it with like United Nations, where they have their own branch with the IMF, and they have their own currency that they deal with, right? So I imagine it'll be the exact same thing as that.
Yeah, right. So on this kind of chain of thinking, you know, there's a lot of, you know, people that watch this who are, you know, Bitcoiners, you know, they're more into cryptocurrency. And so, you know, there's a bit of an ongoing debate, I think, between Bitcoin and gold. So I wanted to walk through 5 or 6 of the key properties of money. And, you know, let's just have like a little debate around each one and discuss some of those properties, right? So the first one is fungible, which basically means that, you know, one unit of currency, gold commodity, is directly substitutable for another. I would contend that with gold, you would need to have, you know, whether you're trading in gold coins or gold bars, the cutting process and like the shaping process, the weighing process, to make sure every single one is exactly the same can be quite cumbersome. But I think the other thing I would say would be that it's very hard to verify that, you know, what you're getting is actually what you're getting. So for example, you would have heard that some people used to embed like tungsten inside gold and, you know, keep the outer layer as gold. So how would you respond to that in terms of, you know, gold being fungible and uniform?
So that is actually quite interesting, because most people have never touched gold before in their life, right? So just for the camera, I've got a couple of gold things here, and you can feel it's, you know, even the small 1 ounces.
Yeah,
you know, you can feel that they're
deadly.
So to inject, you know, and 1 ounce, by the way, this is currently, and this is in Australia, it's $3,800. So you can try and somehow inject a little bit of tungsten in there, you know, and then cover, you know, gold plate it. It's a lot of effort. Secondly, it's very easy now. You get these X-ray ultrasonic scanners and stuff, and you just put it on, you weigh it, and it'll tell you exactly how fine it is. So if you have a piece of like, you know, hidden, you know, tin in my kilo bar of silver, when you do a purity test, it will come up as, you know, 90% or not 49's fine.
Right. So you're saying that there's enough technology today where the testing can go through and sort of
any jewelry shop, you can rock in and be like, there it is. How pure is it? Because a lot of places they'll give you cash for gold, right? Even the little pawnbrokers, they give you cash for gold. You rock in with a necklace, they'll scratch it, you drip acid on it, and depending on the purity of the metal, certain aspects of the acid will dissolve. So gold doesn't react to anything. So you put like the strongest acid on it, it'll still be there. But you know, if it's got copper or some brass in it or some whatever, that dissolves out. So, and then you can tell the purity by the different level of acid that you pour on it. So there's loads of different ways. Any pawnbroker, any jewelry shop will be able to verify. But once you've actually held it and you've, you know, for a while, you can tell.
Okay.
You know, and then there's some more reputable refiners. ABC is a good one, and things like that. Perthmin, you know, there's a few.
Yeah, the whole reputation is staked on it being pure. If they sold one dodgy bar of gold, you know, the whole business would collapse. Basically.
That's it. Yeah.
So
exactly.
That's fair enough. Feel free to swing any of these at me for Bitcoin as well. in between.
How do you tell that this Bitcoin the same Bitcoin I gave you?
That's a good question. It's actually very difficult to tell, but it's more a case of, do you care? So as long as you're getting if you sent me a Bitcoin, was that the Bitcoin that you said you were going to send me? It's almost irrelevant when it comes to Bitcoin. As long as I can see it in my public address and it's used the Bitcoin blockchain, you can be certain that it's settled into your account. There is no, at least in the 15 years of history so far, there hasn't been, a clear instance of somebody being able to double spend Bitcoin they don't have and, retake the transaction back. I think that's partly why it's grown so quickly to, the trillion market cap. So it has, that sort of the verifiability is really fast, and obviously it's a lot cheaper and quicker than having to chemically test on certain things. But, at the same time, if you're the type of person that likes to see things and touch things and hold things, and that's, that is a lot of people, then, Bitcoin isn't real for that type of person, right? So the second quality I wanted to talk about is portability. And I think this one's super interesting because throughout history, if we go back a couple hundred years before we had the Industrial Revolution, things could pretty much move as fast as a pigeon if it was light, or if it was a bit heavier, a horseback is kind of your quickest option.
Yeah.
Or by sea if it's international, right? And, dealing in gold in that type of a world, to me makes more sense because, it's going to go as fast as the medium of transport available. You're lugging something physical, albeit quite heavy. Today, we live in a much more digital world. And when it comes to money or storing value, people certainly place value on the ability to move money around the world quickly, whether it's for purchasing goods and services or even to escape hostile regimes. So if we use the example of Russia, Ukraine, I would say it might be easier to sneak out of the border with your seed phrase for Bitcoin in your head than it would be to take your bars of gold across the border. So what would you say in terms of, gold being portable and, does it have any advantages in that respect?
So I think actually being quick to transact, the quicker transaction is to me say, here's the gold, there's my goods, that's it. So how I see it is that you'd only accept Bitcoin as payment if you knew that you could transfer your Bitcoin into them dollars to buy something with. Because right now, let's face it, although there's occasional shops that might sell a pizza in Bitcoin. If I went to Tesco's or Walmart or whatever, Target, and said, here's my Bitcoin wallet, can I buy that thing? They're going to say no. So I've transferred my Bitcoin into dollars to then purchase something.
We're touching on the next one, which is acceptability, but we'll blend the two then. That's fine. That's fine. Sure.
But so I think you only trust Bitcoin because if you know that you can use that Bitcoin to then buy dollars to then buy something. If I knew for a fact that you would give me a Bitcoin today, but then tomorrow I'm going to get less dollars for it than I did today, I wouldn't want it. I'd be like, nah, it's going down. I don't want it. I want it when it goes up.
But surely it's, you'd say the same thing with gold, right? Like not a lot of shops will directly take it, but it's, let's face it, we all transact in fiat currencies because it's faster and easier and it's legally mandated by the government. It's not legally mandated to transact in Bitcoin. It's not legally mandated to transact in gold. But
technically it is.
It is legally mandated in Australia.
So to gold, if you have a minted gold coin or a silver coin, it's legal tender. So you go to Perth Mint. So for example, if I just put up this one, so these are silver 1 ounce coins. So I could go to a shop technically and go to a bank and be like, that's $1, give me and legally they can't say no.
As in, but each of these is obviously worth significantly more than $1, right?
It's worth more as a metal than it is as a currency.
Right, but you're saying that, the most you could expect from a legal tender point of view from a shopkeeper would be $1?
Yeah.
Really?
But from a scrap metal guy, it'll be $45.
Okay, I'll go to the scrap metal guy.
in Australia, that is.
Yeah.
So in US dollars, it's like, I don't know, $32 an ounce, something like that. but it's a coin, which means you pay a premium. If you like, spot price is 32. If you want to actually hold it, you pay a premium for that. So it'd be 35, 36, like $5 above spot, crazy like that. But yeah, and actually the Bank of International Settlements in 2017 or 19, they reclassified gold as a monetary metal tier 1 asset, which means that it has 100% weighting, which has zero liability. So you pay in gold, transaction is settled. That's it. There's no more.
Yeah, it's not a credit based.
It's not a credit based mechanism. Yeah,
sure.
And it's the only tier 1 asset.
I think it was it JP Morgan who said, gold is money, everything else is credit, something along those lines, right?
So back to what I said before, I'll happily accept your Bitcoin as payment if I know for a fact that I can use my Bitcoin to buy something. I know I can't use my Bitcoin to buy something, so I'll take it into dollars and use the dollars to buy something. At the same time, the same story is happening one layer earlier with dollars. I'll accept your dollars if I know I can buy something. And if I know I can't buy something, I won't accept your dollars or your pesos or your boliviares or whatever it is, your liras. And so there's actually something called Exeter's Pyramid. And if you look at it, it's like a big triangle, and at the bottom it's got gold, and then it's got paper derivatives, then it's got derivatives of derivatives, and it grows, and at the top you have like the most speculative stuff. You know? And in order that when one layer fails, you have to go to the next layer to rebuild and go back up. Currently, the failing layer is $1, which is, you can't buy anything with dollars.
Or bonds, would it be like treasuries and that kind of thing?
Yeah, so treasuries is one layer above that, right? So like, you use dollars to buy treasuries. You use gold to buy dollars, or dollar is a substitute for gold, and then treasuries is like a substitute for dollars because you're going to cash out into dollars after, and then you have all sorts of. And it's actually really interesting. I highly recommend having a look at that and seeing what that's about.
Cool.
But yeah.
Okay. So we've touched on portability and acceptability there, 2 for 1. So in terms of transferability, sorry, that's actually my bad. That's the same as portability. Scarcity, I think, is one of the main points that Bitcoiners and gold bugs like to talk about a lot. And I think we share the same view that, fiat currencies today can be created in infinite quantities technically. And, throughout history, governments, central banks have abused that ability to direct resources how they want.
Every time.
And we're seeing the same today. So one of the debate points with regards to gold is that gold can be continually mined. So let's say the price of gold goes up 50% tomorrow because of your reserve currency thesis. Gold gets adopted as a new gold standard again, and the price jumps 50% in a day. I would say that all of the gold miners around the world are they're gonna be investing 50% more to dig the proportionate amount of gold out of the ground, which could bring down the price because of supply and demand dynamics. What would you say to that?
So it's actually quite interesting because, so at the moment gold's up, right? So everyone's excited, gold's rallying. But actually, if you look at gold compared to the rest of the commodity index, it's actually not that up. It's not up that much because petrol's up, copper's up, labor's up, silver's up. So you have to work out, gold has to go up relative to the cost of labor, the cost of oil, the cost of everything for it to then become more desirable to drill. If gold goes up by double, but the cost of digging up doubles, it's not worth it. And at the same time, with gold, a lot of people haven't invested. And when you mine gold, it's not just like, I'm going to build a little mining rig and there it is. It's a gold mine. It's literally like a town. They build these towns in the middle of the outback, in the middle of nowhere, and they have a whole infrastructure. It takes about a decade to get one in the ground, going, running, and then there's no guarantee what you're going to get. Like you do the junior miners go out and they'll, find a little bit of gold here, try and get investors to put in more money so they can develop something, or normally a big gold or a big mining company will see that and be like, yeah, we'll just buy you out. And so it's actually not that easy. And it's so difficult, in fact, that people are talking about mining asteroids. There's a very, very limited supply. It's not easy to get. The labor involved is huge. Coin or just any crypto, it's man-made. If man made it, they can make it again. gold's not the quickest to transfer, but of the cryptos, neither is Bitcoin.
Yeah, no, right. In terms of speed,
in terms of speed, neither is Bitcoin, but Bitcoin's the one that people focus on. So I don't know if the speed is that relevant. I think people mentality is 100% the driving factor. I think what makes Bitcoin separate from all the other cryptos, you know. Sorry, man, my neighbour's downstairs, man. It's slamming. We'll cut this bit out.
Yeah.
Sorry, they're just slamming doors
don't worry
and
about
shit.
it. I was like, we can just...
We'll crop it.
I don't know how audible it is on the phone, but there's like...
All the cameras like shaking.
It sounds like Russia-Ukraine is kicking off below.
That's why I've got it.
They've dug tunnels underneath.
I'm ready.
You've got the gold bars, you're out of here.
Yeah. But,
don't worry about it. I think if it's bad, we'll cut it, but
yeah.
Otherwise it might be entertaining. So.
What I don't get is it's only a small apartment. They've got like 4 doors.
Yeah.
Yeah, I've heard them slam about 10. What are they doing?
You just got to get the last word in, you know.
Yeah.
No.
Open it, slam it
again. Anyway, so we were on the topic of scarcity. We'll try and jump in between the door slams. So with Bitcoin scarcity, obviously, as you mentioned, it's man-made. That, you know, some people would see that as a disadvantage because it's not naturally occurring element, and as you said, you know, somebody could create a Bitcoin 2.0, and I think people have used that line of argument. Don't necessarily agree with that because of the network effects of Bitcoin, and you know, it's like saying, or Richard Branson when he said, "I'm going to come along and make Virgin Cola, everyone's going to buy it." Yeah. I don't think they did too well long term. Yeah. So that, you know,
there's something about pedigree, like.
Pedigree and you know, being the first widespread successful, you know, with those network effects. The other point with scarcity and Bitcoin is that because it's man-made, some people like Michael Saylor have described it as perfectly engineered money. And you know, you're an engineer yourself, right? It's the ability for the first time in history for humans to have 100% control and design over how this monetary network works. And because of that, we know there's a maximum supply of 21 million coins, each divisible by 100 million units. And, you know, I think that is what drives the value. It's, you know, if people saw that Bitcoin could be produced in infinite quantities, which is one of the debate points against many of the other cryptos. Even Ethereum doesn't have a hard cap, you know, and that's the second largest. It's like, it has functionality, but do you want to invest in that if, you know, there's a foundation that can just print or effectively create a lot more of it? Personally, not so much.
So this is actually an interesting one because I've thought about this. So if I had my metal in a vault and I died, it would remain in that vault. And then eventually my fees don't get paid, and then the vault phones and say, right, you've got 90 days to clear out, and you don't do it, they break it open, it's there. That then gets confiscated by police or whatever, and it goes somewhere else, but it still exists.
Yep.
If I had Bitcoin, I say, right, I don't trust the platforms because like Celsius and all, you know, and Kraken, you know what's happening with Kraken at the moment.
Kraken's been okay.
So, no, but they're charging all the fees to take your money out.
They can, yeah.
And then like you had FTX and you know. So I don't trust having it on a network. They can shut it down, so I put it on a cold wallet. And on a cold wallet, you have a metal key, so you can
back it up effectively.
Back it up, but metal corrodes unless it's gold.
You can, right? You know, that's actually a great business idea. Is putting seed phrases for your Bitcoin wallet, but making the seed phrase plates to back it up in gold. That's actually a great idea.
There we go.
Yeah, I'll talk to you after this.
Yeah, but okay. So let's say, for example, I have it on a cold wallet, and then something happens to me. What happens to that Bitcoin?
Yeah.
No one can access it. It's not on a platform. It's on a cold wallet somewhere. Does that just disappear for the rest of eternity?
Really good question, yeah.
So I've heard of people making like a mechanism where you have to enter in a key every 3 months. If you don't, it automatically transfers it to someone else. And, you know, so like a kind of like a next of kin kind of thing. Or you can put it in your will. But for the most part, I don't think people are doing that. So when Lord Keynes did an experiment in the 60s to come up with a basket of commodities that could be used as money, one of the criteria is it can't be perishable. So you can't use oil or wheat or something, right? But if Bitcoin's disappearing because people are dying, or they're forgetting their keys and their cold wallet ends up in, USB in a landfill somewhere, what happens to that Bitcoin? That disappears as well, which makes it a perishable good, which means on the decline, I imagine there'll be less Bitcoin. So there's 21 in total. There's 21 million Bitcoin, times that by, 8 to the power of 10 or whatever it is, because you're Satoshis, right? And then all your, eventually it's going to disappear. On the decline, the value might go up because, there's less of it, supply versus demand, more dollars following it, but it's a perishable good. So maybe in the next 10 years, 15, 20, 100 years, there might not be any of it around.
Yeah, I mean, it's actually a fair criticism that you've got technically like a deflationary supply of Bitcoin, and hopefully it takes longer than 100 years for everybody ever to lose their keys. But yeah, like a lot of people that self-custody their Bitcoin, they haven't put wills in place. They keep it at home on a wallet, as you said. They're not using institutions to help custody it, and so they die. Something terrible happens to them. They haven't instructed their spouse. They haven't left any will. It can get lost, and it has done historically. So it is a fair criticism, I would say. One of the things people can do to stop that from happening is this a thing called MIC, which is multi-institutional custody. So you can actually do the same with people, whether it's your family and friends, but you can do it with companies now and pay a small fee, and effectively you can do like what's called 2 of 3 or 4 of 5 or 7 of 8, whatever you want to do. But basically, no single third party, whether it's family or company, can access that Bitcoin. You always need 2 of 3 or 7 of 8 signatures to agree that that was the instruction to be made. So they can't get it for themselves, but under instruction or under like a written document, they can execute a transaction if you were to die. But yeah, fair point, and a lot of people don't do that yet, I think.
Yeah. And the other thing as well, and I think I mentioned this briefly in the first podcast, is that the thing that attracted me to crypto, because once upon a time when Bitcoin was, not first came out, but when it started getting a bit mainstream, I was like, oh, interesting, I like the way it works. There's some other cryptos that I was also very interested in, like Solana, very interested in. Hedera hash graph, because it's super rapid. But then with Bitcoin in particular, once they made the ETF, that means that all the cool things that it came with, the fact that you can peer-to-peer transact, you can put your money in a cold wallet, you can take it over a border, all those things disappeared. It's like, all right. So now, big bank BlackRock owns your Bitcoin, right? And you have an IOU certificate for it, which is the same as having dollars, an IOU certificate for gold.
Yeah,
So it led me, and then at the same time, I know this is probably off tangent, maybe something that we're going to cover later, but like, BlackRock, they're just a bunch of motherfuckers. If you think about it,
sponsored by BlackRock.
Sponsored by BlackRock. Maybe if you think about it, right? All this like ultra woke bullshit, all this like environmental net zero carbon neutral bullshit. It's all like BlackRock, Vanguard, Silvergate, right? They're the big players in it. They're the ones who are lending money to companies to like push this bullshit agenda, right? And I disagree with them. And the fact that they're like, yeah, we'll take Bitcoin ETF, it's just another like nail in the coffin of why I don't want to be associated with Bitcoin.
Fair enough.
And I know this sounds super far-fetched, but like when Lehman Brothers collapsed in 2008, no one was expecting it. They were like a big one. They were like, I reckon one of these woke banks are going to collapse. I reckon a lot of what they're pushing with the ESG stuff, with the woke shit, with the Bitcoin ETFs, I think eventually, and it won't be long, the rest of the world's going to turn around, but you know what, fuck this. We don't want to be involved in this. And then if they have a lot of like collateral in, a lot of stake in those games, I think they might collapse.
Yeah, it's, companies collapsing, is definitely possible. I would say with BlackRock, obviously world's largest fund manager, them taking Bitcoin into custody, I think they work with Coinbase to custody the Bitcoin and offer the ETF products you mentioned to the public. I personally don't see that as a Bitcoiner. It doesn't bother me too much. And the reason is that I know that there's people that are, 40, 50, 60 plus that do not want to download a crypto exchange onto their phone, which is, to your point earlier that you mentioned. But they do have a share brokerage account. They do trust logging into their, JP Morgan securities account and, buying an ETF. And they're not in it to, have some funds outside of governmental control. They just want the price appreciation. And ultimately it broadens the market. I think it broadens accessibility, but it doesn't, align with the original vision of what Bitcoin is. That's true. But the reality is, if you want to have money outside the system and, self-custody and all those things, you still have these. You can hold some gold, but you can also do that with Bitcoin. So at least you have the optionality. At least, like gold is in multiple ETFs, right? But you wouldn't throw the baby out with the bathwater with gold.
Well, this is actually interesting. So you're right. So gold is in a lot of ETFs, and you have the GLD with fund, all that kind of stuff, and SLD for silver. But like, when you want physical, you pay a premium for it. Mm-hmm. You pay whatever the spot price is plus, right? And actually, you can see at the moment a lot of like issues happening similar to the nickel market, where people want delivery. So you go in, you say, a couple of kilos of gold, and you buy it on the COMEX or whatever it is, and like, yeah, cool, done. You put your money in, and you own some gold. When you ask delivery for it, the answer is either no, you're not getting it, or it's going to be a very, very long wait. Mm-hmm. So unless you're like an institution, like you're not getting it, right? And again, I think this is the type of thing where the world is waking up to it. Not long ago, the Australian Reserve Bank wanted to repatriate their gold in the UK. I think there's like, how much it was. There's a significant amount of gold. It's in the UK vaults, right? Bank of England, they're looking after it. And hopefully we'll get it back. India just repatriated a load of metal from the UK as well. Everyone wants their Venezuela, everyone wants their gold back, and the UK is like, well, is your country safe enough for us to give you back? What if like it gets in the wrong hands? All this bullshit. The truth is they don't have it.
Mm-hmm. Yeah.
So there's all these like certificates similar to the run in 1971 when they said we want our gold and we didn't have the gold to. I think a very similar thing will happen actually with the gold run, where people are going to want physical delivery.
Hence the premium.
And it won't be there.
Yeah.
Hence you pay a premium to actually get it. And if you're getting it small, like, all right, you can go to your bullion dealer, with, 20 grand cash, and he'll have a few ounces there for you. But you want like a couple of kilos, you're waiting, you might wait 6 weeks. Mm-hmm.
Yeah.
And Australia is actually quite a good country for gold, because the premiums are quite low because we mine it. Australia is actually the richest country in the world because we have all the gold in the ground and a very small population to share it with. So Australia could actually be like the next Saudi, Dubai, oil shit kind of country, but like the gold version, if the government just got their act together and sorted it. So over in Australia, the premiums aren't so bad. In the UK, in the Middle East and stuff like that, I remember flying through the airport looking at the premiums on gold and looking on my phone at what am I paying for it. And it's, it's like 3% more there than it is here. Mm-hmm. And even here, you're paying, 5% on top of spot. Mm. So, there's a lot of certificates, a lot of ETFs. People don't want to have dollars and cash in the bank. Anyone who's got a significant amount of cash in the bank is a fucking idiot. Like, I'll fight you, but like, it's true. And they want to look for a way out, and they want to invest in something. They don't know what. Actually, owning gold, holding it, is weird. Like, no, how do you even store it? Like, what does it look like? There's so many questions, right? Whereas you can just go on like one of those generic eToro plus 500s, Robinhood, and be like, gold, click, I have gold now.
Yeah.
Right? The rule of thumb with metals, especially precious metals, is if you can't hold it, you don't own it.
Yeah.
Right? And there are times when I'm a bit worried, it's in the vault, I'm like, I hope it's still there, Yeah. But you put it and you spread it out, and
I think So your point being that's true for gold, but it's true for Bitcoin as well. If you own the ETF, sure you might on paper have the price appreciation, but if something was to happen, untoward to BlackRock or systemically bad, and the United States, for whatever reason, decided to seize companies' Bitcoin holdings and wanted to sell it at market or whatever, you don't have the ability to hold on to your Bitcoin. It's effectively, you have a claim on it, but the claim won't be, the promise won't be met, by the company.
Yeah, and they'll give you maybe a cash value for it or whatever it is. And what I think happens, 'cause this is what I'm again worried about. Let's say you have your Bitcoin in ETFs. If you then want to cash out your ETF, so what happens is typically everyone prospers at the same time and everyone struggles at the same time, right? And there'd be a handful of outliers who are like, winning when everyone's losing, but they're the handful. What I think what's going to happen, I think and this is, I'm talking the next few years, by 2030, 2025, 26 even, I think a lot of people are going to struggle with repayments, mortgage debt, cost of living, just everything. Unemployment, we'll touch on that in a bit. And everyone's going to need quick liquidity injection. And the most liquid thing is like selling your Bitcoin or selling your digital stocks, shares, through your platform, your eToro plus 500. Now, if everyone sells their Bitcoin, which is stored through an ETF all at the same time, or in the same kind of season, that means that the banks have to basically turn their Bitcoin into dollars. They got to sell the Bitcoin into dollars to then give to those people, right? But if everyone's selling their Bitcoin, it means who's buying their Bitcoin? No one wants to be buying when everyone's selling, because everyone's selling. That's the whole point. There'll be a handful of outliers who will be buying. When that happens, I think it's going to happen so quick that the banks won't actually be able to meet the demand, the dollar demand. So it'll be a matter of, I'll cash out my ETF, and they're either going to hit you with it's going to be, 10 working days or, 30 days, which at the end of 30 days it might not happen. We'll give or it will be we can give you it, but we're going to have to charge you a ridiculous fee to withdraw it, which is going to deter you from wanting to take it out. And platforms, I think, are already starting to do that, like Kraken. You said it today in our investment group, so I was like, I have to bring this up. So and it's a way of keeping it in the system. Because if there's a Bitcoin run, if everyone's selling Bitcoin, to make a transaction, someone's got to sell, someone's also got to buy. If no one's buying because everyone's desperate, it means the banks won't be able to sell it. So then what happens?
Yeah, just on that Kraken point as well, it was $1,400 Australian to sell roughly, call it $63,000 worth of Bitcoin. It worked out to 1.5% anyway as a percentage, which is pretty big, quite a lot. However, what I did find out is if you download Kraken Pro, then the rates are much better. So just for any regular investors who are watching this, absolutely download Kraken Pro if you can. The functionality and the design is a little bit more technical looking, but you save yourself a shitload of money. So absolutely worth doing that.
But they have a fee as well, do they? Pro?
Yeah, they have a fee, but it's less than 0.2%.
Yeah, okay.
So it's much better. I just wanted to touch on two more points on this debate. So the two more points are security and environment, which we brushed past. So we'll start with security. Some people would argue, I would argue, that if you've got all of your gold in a vault and the government decides to seize it, or even just a burglar decides to attack your home vault or the company's vault where the gold is held, you've got the burden of it being physical and therefore confiscatable, right? And I would say that with Bitcoin, you can have your password on a physical device, but technically, if you can remember a sequence of words, which is not a good long-term strategy because Alzheimer's, but if in an emergency situation you had to skip over the border of a country where you were a refugee, or you're in a life-threatening situation of some sort, you can secure your Bitcoin with nothing more than a memory, which is that sounds like magic, right? You can literally take money from somewhere and redeem it elsewhere. If you want to redeem it into fiat currencies or for gold, whatever, but the fact that you can do that with just nothing more than a thought is very powerful.
No, I agree. And actually, so I obviously live in Australia, used to live in Cyprus, my sister lives in the UK, my brother just moved here. So we, as a family, spread across the world. And we've had this conversation. I said to my parents, you should get some metal in Cyprus. I said to my sister, you should get some metal in London. If anything happens, at least you're in different jurisdictions.
You've spread it around a little bit.
You spread it around a little bit so you can be where you need to be. At the same time, gold is extremely liquid. So you go to a bullion dealer and you say, there's my medal. And he'll say, do you want cash or do you want me to put it into a bank account? I'm like, yep, put it in a bank account. And within 48 hours, it's in your bank account. And then you can transfer that.
But you could get clubbed. You could get clubbed or mugged. Let's say you're in London, right? You're walking down to your gold bullion dealer with $250,000 of gold, and somebody pulls a knife and says, "Hey mate, hand over your bag, otherwise I'm going to stab you." That's a risk, right?
100%. And I kind of like it is a risk, and I've felt nervous before. So, I mean, okay, so. These are 2 1 kilo bars, and I bought these at the same time. In Australia, they're $122,000 each. So it's $250,000 just here. I had this in a backpack. I was on a tram. And I remember sitting there, just this backpack on the floor, trying to pretend to look casual, like no one's watching. Normally I don't bother paying for my Mikey. On this occasion, I was like, I don't want to get pulled up by anyone, How to explain this? I'll pay my Mikey, but I was nervous on the way home. The next day, went to the vault, and it's in Brighton on Church Street, and the whole of security, you go through a cage, that cage closes, next cage opens, you walk through, that closes, you have to show, I think it's 30 points worth of ID, so a driving license and a Medicare, thumbprint, face fingerprint, iris scan, and then someone escorts you into the vault. You got a safety box, you put it in, 2 keys, like it's a whole thing. Now it's like, okay.
So you feel safe.
I can relax. It's not here,
yeah.
So, and I started, vault fee, I think it's about $630 a year. So it's not even that much. And you can put whatever you want in there. You can put and I had this, similar to this a discussion with a friend of mine. Okay, so got an expensive watch, and you're not worried about walking down the street with it. This one here in particular, on 24 chrono, it's a Rolex. It's like 17 grand. Anyone could just be like, that watch is mine now.
Yeah.
Give it to me. I mean, all right, I'll put up a fight, but put up a knife, it's yours. I'm not going to lose my life over it.
Yeah.
But it's anything nice, you have to worry about it getting stolen.
Yep.
And the fact that people are wanting to kill you for it means it's worth something. So I almost see it as like, I'm flattered. I'm flattered you like it.
It's a nice watch. Yeah.
Anything. This. You have a hot girlfriend. Some dude's trying to steal it from you. Right? It doesn't matter what you have.
But would you, so I would, I'll play devil's advocate on myself, but with Bitcoin, the security features are, you've got a public key and a private key, and if you keep those safe, whether it's physically or mentally, very good track record of not being hacked, stolen away from you, right? But what you just reminded me of is when you're taking your bars of gold down to the vault, is every time it comes time to do a transaction in Bitcoin, and let's say that you're moving, a large amount of Bitcoin, if you're lucky enough to have a large amount of Bitcoin, it's nerve-wracking, because if you get the public address wrong, which is where you send it to, that Bitcoin is gone forever, and it's irrevocable, like irredeemable. There is no, call your NAB, customer service team. It's gone.
I've actually experienced that firsthand with Bitcoin. So, even though I'm not a Bitcoiner, I've actually used it to buy stuff, which I think puts me in the top 99% of because most people haven't bought anything with it. Right? I've actually bought stuff with it. And
we won't discuss what you bought.
We won't discuss because I don't want to incriminate myself. But, when you have, no fans, sometimes you don't want the money. Anyway.
You're going to accept the tips.
Yeah, exactly. So the first time, sent to an address, and I was like, cool. And they asked you, do you know this person? Do you recognize this person? I was like, of course I don't. Same way when I buy something on Amazon, I don't know who's sending it to me. Or eBay, I'm just going to put my credit card details and hope something turns up in the post. And if it doesn't, at least Amazon or eBay has a customer service thing, and they can, with Bitcoin, you don't have that. So we went to buy some stuff, nothing turned up. And I was like, maybe I'll try again. So I tried again. And then nothing turned up. I got an apology email saying, sorry, stuff didn't turn up. I was like, cool, thanks.
Was it just a scam?
Can you send it to me though? I got no. And then I tried a different website, and then it turned up. But it took multiple attempts.
Right.
it asks you, do you know the person? Obviously, I don't, because that's the whole point of being like
Peer-to-peer.
Peer-to-peer. It's like global. It's like a global. Everyone buys things globally and internationally and nationally. I buy something here and they ship it from Brisbane or whatever it is. I don't know the guy in Brisbane selling it. Mm-hmm. Like I could jump on a flight, go all the way up there, sit with him, be like, right, that's the good. Here's my Bitcoin, right? Like,
yeah.
But then if I'm in face to face, I might as well have some gold coins.
Yeah.
I'd be like, there's some silver.
Sure.
So it's kind of like, and I've experienced it. I didn't lose that much. So again, not only just have faith that you can buy stuff with it, you got to have faith in people.
Yeah.
And I think as the world is getting more and more shitty, people have less and less faith in people, which is quite a sad turnout. But
yeah, I mean, I would say the good redeeming quality of sending a digital payment on Bitcoin and the security is always do a test transaction. So, whether it's $5 or, whatever, just some tiny amount before you make such a large transaction. At least, worst case scenario, that's your loss. But
yeah.
I know a lot of people don't do that and they send, a large amount. Anyway, I'm going to jump into the last debate point that I wanted to get into on Bitcoin and gold, which is environment. So I would say at this point in history, Bitcoin has been more in the limelight. Going back a couple of years, it was a lot more of a negative limelight with respect to, there were reports coming out in major publications that Bitcoin's on track to consume all of the world's energy by like 2024. Just like, it's very silly academic research, whoever put that out. But there's no doubt about it that Bitcoin consumes a lot of electricity. So I'm going to ask you about gold in a minute, but at least from what I've seen, there's been academic papers that have come out more recently. Daniel Batten is a really strong proponent in the Bitcoin space at the minute who's put forward good research showing that not only is Bitcoin majority renewable electricity, because you can locate it anywhere, it doesn't need to be next to a city, it can be running on geothermal or hydroelectricity, but the second order and third order benefits, so that companies that want to, let's say, build new data warehouses, whether it's for artificial intelligence or for other electricity generating purposes, there's typically a long payback period between you expend 5, 10, 20 million, sometimes 100 million to set up this facility and then actually have it be functional and start serving a purpose.
yeah.
When you can, put a few mining rigs and access large amounts of electricity very quickly, and what we're seeing is that a lot of businesses, companies are like, hey, we can actually, get to profitability faster, and we can use this for, our renewable payback period on the investment. That's one thing on Bitcoin. The second thing I would say is when it comes to green energy, a lot of the criticism has been, just lodged at, Bitcoin consumes a lot of electricity and therefore that's bad. The reality is that quality of life in the world depends on us having access to more energy. And, consuming more electricity isn't bad in and of itself. It just, if you want to have multiple TVs, you want to have, electric vehicles, generally speaking, the more power, the better. I would agree that if there are, Bitcoin miners that are using dirty fossil fuels to, you probably don't like that term because you're a petrol head, but mine Bitcoin, it's not necessarily like, you can use clean energy to mine Bitcoin. Flipping it to gold, I would say gold's a lot dirtier in my opinion. And I would say that because not only have you got to dig it out of the ground, but in order to purify it and separate the gold from a lot of the other crap, a lot of chemicals, nitrates are used right in the gold mines themselves, and it can be very toxic to whether it's local water supplies, local environments. So, go on.
What's a Bitcoin rig?
What is a Bitcoin rig?
Yeah.
It is the Bitcoin specific term is that's an ASIC miner, so application
like physically.
It's basically a computer, and that computer mines Bitcoin by taking a number of guesses at...
But it gets hot, like you're running electricity, right?
Yeah.
Running power, it gets hot. How do you cool it?
Well, I've actually got a Bitcoin mining company and we run a bunch of rigs in Norway And because it's absolutely bloody freezing in there and it runs off full hydroelectricity, the area where it is so cold that it's not like cooled by running air conditioning units or anything like that. It's got natural cooling in those places.
But I imagine it's got like fans and it's got like
it does.
Yeah.
It does.
Which fans essentially wraps of copper.
Mm-hmm.
Copper comes out of the ground. So you see these like big, like rooms full of like circuit boards and fans, and you have things to keep the temperatures down or temperatures up or whatever.
Mm-hmm.
It's all motorized. That's all comes up the ground, man. Like
fair point. It's a fair point.
So I'm all for like. I mean, it's like when they talk about electric cars, they're really good and could use energy, but where do you think the energy comes from? All the cabling that runs to your car, all the metal the car's made out of, the battery, the lithium, everything that runs it, comes out the ground. Everything we live in, concrete, comes out the ground, which is all going to add to global warming and sustainability and net zero and all that stuff. So it's all come out the same place. Mm-hmm. Whether you have something that's specifically mining gold or specifically mining, copper or iron, it comes out the ground.
But with Bitcoin mining rigs, like they don't necessarily have to use gold or something like that, right? So you could
copper.
You could use materials that may be damaging to the environment than
normally
gold.
copper comes up with a lot of sulfur, which is really bad.
Yeah.
Which is, but like it's cheap. It's cheap. It carry electricity really well. But yeah, it's
unavoidable. Is I guess what we're probably both saying, right?
It's almost unavoidable, and that's why I don't know why there's so much. I know why there's so much emphasis in it, and like don't get me wrong, I'm not that kind of person who throws car tires into a river. But at the same, well, every now and then,
yeah,
But like, I think there's a level of cleanliness that we can be, and there's some things that are just above and beyond. But it's fighting a war on something that can't be beaten, right? Global warming, climate change. I get it, but also
okay. What about you could make the case for, let's say that the mining rigs for Bitcoin are purely based on recycled materials, right? Now, with gold, there's always the incentive to dig for more, right? To find more. And so it's not like, hey, we've spent some gold, let's just recycle that gold. People are always going to be digging more, destroying the earth more to get at more gold. So
only if it's profitable. Like I said, if oil goes up and the cost of labor goes up and machinery goes up and everything goes up, and the margin on gold is not that great, people won't mine it.
Sure, but people do mine it, right? People, it's not. People haven't stopped mining gold.
They slowed down a lot. It used to be that in California there's a gold rush and the whole world moved to California to mine gold, and then there's a gold rush in Australia. Where was the last gold rush? Like there hasn't been one in forever.
Yeah.
Because no one cares about it. It's so undervalued now that no one wants it.
Well, apart from as you said, the central banks.
Apart from central banks.
This the secret gold rush, right?
Secret gold rush, yeah.
Yeah.
But other than that, like it's got to be profitable, to mine it. And I think I could be wrong. I think with Bitcoin, the algorithm and the halvings and all that kind of stuff, the more you mine it, the harder it becomes to mine, the slower it becomes. And the idea is to slow it down is that you don't also get forks in the blockchain and things like that.
Slow it down? What do you mean? Sorry.
So as you have more transactions, the algorithms get progressively harder and longer, so that it takes longer to then create a new Satoshi or whatever. And then that way it prevents forking the chain. So by design, it's designed to, as it gets more use, it slows down.
The amount, so you're right on the amount of Bitcoin that gets mined slows down by 50% every 4 years until about the year
halving,
2140. That's right, the halving.
Yeah.
In terms of the actual transactions per second that it's designed to facilitate, which is, I think it's 4 per second or up 7. I should know that, but it's super slow, and it's not viable for a currency on that base layer of money. But neither is Fedwire, which is sort of the base money for transacting between major banks and the Federal Reserve in the US. Obviously, you have payment companies build on top, credit card companies, that kind of thing. And similarly, within Bitcoin, there's a thing called Lightning Network, which has been built out very, very slowly and deliberately, where they think, the transactions could be in the millions per second, and it would be suitable.
But is it possible that as we start approaching 21 million in the next two halvings, it's going to become so slow?
No, so 2,140 would be when the last Bitcoins get mined. So another 120 years. So that's when we'd get to the 21 million. But we're already at like 19. Yeah, so it's mostly mined.
It's mostly mined, yeah. But as we get closer and closer, it's going to become less and less profitable. You need more and more mining rigs and all this kind of stuff. Is it possible that the price of copper might go up more than the price of Bitcoin?
Anything's technically possible.
In which case,
I suppose,
it might not be a bad investment. You have loads of mining rigs, recycle them or melt them down.
Yeah, I mean,
and then you'll have metal.
Eventually, when it becomes unprofitable to mine more Bitcoin, because there's a few factors. One is you're competing against all of the other miners in the world for the same amount of Bitcoin that will get released every 10 minutes. And the more miners that compete, the less your percentage share of the Bitcoin.
Yeah.
The second factor is obviously the halving, which reduces the supply every 4 years. And then the third factor that makes it more or less profitable is obviously your cost of electricity. Now, a lot of the big companies like Marathon Digital, they can afford to literally build entire warehouses of these rigs themselves, tens of thousands of rigs, billions of dollars. And they'll do it in the middle of nowhere where their cost of electricity is effectively zero. It's fully renewable. So yeah, a lot of the other players in the space will get squeezed out of mining Bitcoin, which in itself, a separate sort of point, creates centralization risk, because a lot of the smaller players, individuals, companies can get squeezed out over time, and you've got large companies that can, they're the ones validating transactions, verifying transactions. You can still run what's called a node, which effectively keeps a record of the Bitcoin blockchain and run that on your computer. But mining becomes more centralized over time. It's whoever gets the cheapest electricity. Anyway.
It's interesting, actually. So with renewables, I go back to the environment and everything. A lot of like solar and all these things, there's a lot of silver that goes into actually manufacturing renewable energy sources. So I think from my understanding, like one of those small solar panels is 2/3 of an ounce.
Right.
And there's a massive deficit in the rate of production of silver, rate of mining of silver versus it being used in industry, to the point where I think they're going to start running out of silver soon. So even though I'm bullish on gold, I'm even more bullish on silver. Silver's going to
because there's more utility in it, right?
Yeah. There's more utility, and it's money. So people are hoarding it, they're collecting it. It's used and stuff. Because it's only $32 an ounce at the moment in the US. It's not worth recycling. It's and silver itself doesn't come out the ground. Like, you have very few silver mines. Silver's normally a byproduct of like copper or nickel or something, and silver will be like, some here. We'll just keep that.
Yep.
So it's not really mined. As mining becomes more expensive, labor costs, energy costs go up. There's less of it, and there's less silver. And ironically, you need the silver to be sustainable.
Yeah, demand's increasing effectively.
Demand's increasing, You want sustainability, you need silver. To get silver, you've got to mine and be unsustainable to get it. Right. So it's like a
chicken and
definitely
egg,
that doesn't go anywhere.
Yeah. So that was the Bitcoin and gold discussion. Second part of this interview, podcast, whatever you want to call it, it would be good to just touch on some of the more recent things that we've seen happening in the economy. So I'm just going to talk to 3 statistics quickly, and then we'll delve into, your views, my views on the economy, and, how you're positioning for how things are changing. So
let's go.
So in terms of 3 figures that recently came out, we saw in the United States that unemployment rose from 4.1 to 4.3%. That's a 3-year high, and it also triggered what's called the SARM rule. So SARM rule is where unemployment rises by more than 0.5% on a trailing 3-month average. When that's happened throughout history, the SARM rule has been tracked since the 70s, so not 100 years, but 50 plus years of history. it's called a recession accurately, more or less every time, I think, with the one exception. So that's concerning, is that we seem to be heading towards a recession if history is anything to go by. The other thing that's also interesting on this unemployment statistic is that whilst 200,000 new jobs were created, it's below the required amount for what the US says is healthy levels of employment. Because there's so many migrants entering into the US at the minute, this is well below expectations. And not only that, but the main contributions for jobs at the minute are government driven. They're not people that are boosting the economy. It's not that these jobs are bad, like obviously like healthcare, education, these things are really important in society. But when they run, without budget, the government can increase spending without necessarily producing anything. Obviously, you can run into major problems of debt. The other two things I just want to touch on quickly are what's called the Purchasing Manager Index. So I was looking this up in a little bit more detail last night, but Purchasing Manager Index is a survey used to assess purchasing activity across the supply chain. And basically, if a score of 50 comes out, it indicates that there's no change month to month in terms of the main suppliers of goods and services, like the companies, the manufacturers, the wholesalers that buy things. If the index comes out as 50, there's no change. Things aren't slowing down, but they're not speeding up. What we saw is that PMI declined to 46.8, and it was already 48.5 in the previous quarter. So not only are things slowing down, they're slowing down at an increasing pace. And this is an important leading indicator for economic health. The last statistic I wanted to touch on is the US dollar index. So USDX, if you want to look that up on your trading charts, if you have that. So USDX is an index used to measure the value of the US dollar relative to some of the 6 largest economies in the world. So Britain, Japan, who else is in there? Sweden, the Swiss franc, and the Canadian dollar. And that's declined to, I think, 104 on the index. So it's down 2.5% month over month, but it's also up over the last 15 years by sort of 20+%. I think what's interesting is what we were discussing earlier around, potential dollar decline or, the US economy weakening, is that relative to some of these other countries, there seems to be less demand, less strength in the US dollar more recently, at least. So yeah, those are 3 statistics I wanted to share. What do you take from that in terms of your view of the economy at the minute and the health of the economy?
So I have my own definition of recession, and the reason why is because there used to be a definition of 2 back-to-back quarters of negative growth, negative GDP, and then as soon as it didn't meet the numbers that the governments and the reserve banks wanted, they then fudged it, but unemployment, so then that became another factor. So we're not in a recession, but we're in a per capita recession, per person recession, but like the country's not. And then they change all their things. So even unemployment, for example, they measure unemployment with U3. U3 unemployment is basically people who are actively on government websites to find work, job keepers, Centrelink, whatever it is, the welfare office. That's what you see. That's how they measure it. So unless you're actively looking for jobs, you're not included in that quota. U6 unemployment is employment where I've quit my job because it's not my passion. I'm still looking for something else, but can't quite find it. I haven't signed on for welfare yet, so I'm not actively looking as far as the government are concerned, or if you're a student, that's also not considered unemployed as well. So actual U6 numbers are way higher, right? So they're reporting, 4%, 5%, 4.5% or 4.4% unemployment. Actual U6 unemployment is probably closer to 10, maybe even more, I don't know. So the metric, how they measure it, is different. In Australia, the Reserve Bank said that they're not going to cut interest rates until they hit 4.5% unemployment. That's their target. They want 4.5% of the population to be unemployed and actively looking for jobs. The problem is that you always use data, and data is always a lagging indicator. So I have a very strong feeling they're going to overshoot and hit 5%, by their own measurements, by their own metric. and they're going to be like, oh fuck, and then they're going to cut rates super quick just to like give businesses and everyone a breathe, you know, breath of fresh air, to then employ more people and try and get some of that unemployment under control. Also, it means that government can borrow money cheaper. And the thing with government that's great is that they can they can order money to be printed. They can't print it themselves. The Reserve Bank will print it and they'll swap for some bonds instead. And they can make jobs out of absolutely thin air. They can be like, right, unemployment's down because everyone's working from home and all the CBDs are all shutting down. There's no foot traffic around the delis and the coffee shops. So there's unemployment in there. We need to recreate some employment. So what we're going to do is we're going to now introduce a new body in WorkSafe, and we're going to go around people's homes to make sure that their working environment at home is safe. It's for their safety, right? To make sure that you have a proper office set up at home. If you don't, you cannot work from home. You have to go and see. And they're going to make a whole industry out of that, I believe. They can make a whole industry. Like you ever see like people on the road doing like roadworks? There's one person digging a hole while three people are watching to make sure he's safe.
Yep.
You know, there's a guy digging a hole next to another guy pointing at a hole to say, don't stop in there. You know, don't fall in that hole. You know, it's
they a lot of bullshit jobs. Yeah.
It's absolutely bullshit jobs.
Yeah.
And then once they build something, I work in this industry. I work in, engineering and construction. We build something a year, 3 years later, it's like, we need an upgrade. And then they'll take out everything we just designed and built, rebuild it again. Like they'll make work out of nothing. It slips my mind.
Was it one of the 3 indicators or something else?
No, if you put the government in charge of the desert, they'll run out of sand.
Right. I haven't heard that one before.
Milton Fried.
Right.
Milton Friedman.
So what was it again? If you
put the government in charge of the desert,
right, they run out of sand.
They'll run out of sand.
Yeah.
There'll be a deficit in sand. Yeah. Right? Like, what I think is going to happen now, I think the economy, they either go one or two ways. They either keep increasing interest rates, and then the people suffer, and businesses collapse, which makes unemployment, which then, unemployment, because if anyone's unemployed, that's when you have civil unrest. So then they inject a load of cash into the economy, but there's no tax revenue because no one's got a job, which then creates debasement of money, which means your money doesn't buy you anything. So they up interest rates even more to then kill that, which then creates more unemployment.
Yeah.
So it's a never-ending cycle. The alternative is they just print money and your money goes worth nothing. But on the journey there, at least you feel rich, right? And anyone who's got any savvy will not accept money, and they will look for like hard assets, like something solid, maybe some Bitcoin, brick and mortar house, property, something that can't be like inflated away. So I think that's where the economy is going. What they don't understand is, and governments get this wrong every time. There's a book I highly recommend everyone should read it. It's called Economics in One Lesson by Hazlitt. And picture this: I'm a farmer. I use debt to buy all my equipment, my tractors, everything, and land and whatever. I then farm that land, and all the produce goes on sale at the grocery store. When governments up interest rates, I can't now service my vehicles. I can't take out new loans for more equipment, whatever. In fact, because I'm in a deficit and the cost of living is going up and things like that, because I've got a mortgage as well and up interest rates, I now have to sell one of my tractors to pay my mortgage. And then I sell my second tractor, my third tractor. Eventually I have no tractors to sell to keep up with it. So now I have to shut down my farm. Farm shuts down, which now makes the price of whatever I was farming go up. Right? So actually, you think increasing interest rates will calm inflation, when actually it will do it temporarily, but in the long run, it will kill out all the primary producers, all the miners, all the manufacturers, all these type of things.
Which is what we're seeing in some of the data, right? Is there's a slowdown in that purchasing managers index there, but they're buying less stuff and they can't borrow as cheaply to fund some of these raw materials that they use.
Which then means they can't produce. When they can't produce, the consumer has to pay more for whatever is available. In Cyprus, we didn't talk about it in much detail, but in Cyprus they had a bail-in, which is basically you put your money in a bank and it's insured up to a certain amount. And when the banks collapse, which throughout history, every bank has always collapsed, right? I think the oldest bank is like the Bank of England or something. That's only been around for a couple hundred years. But every bank since history has always collapsed. And what either happens is you have a bailout where the government is like, we will give you some money to
not go bankrupt.
Yeah. Or a bail-in where the bank's like, we're going to take all the depositors' money, right? You're guaranteed a little bit.
Yep.
You know, whatever's in there, you know, up to, I think at the time in Cyprus it was 100,000 euros. Anything more than that, you lost. And I mean, I'm from Cyprus. My parents lived there, and I was there when it happened. And my parents got a text message on like Sunday night saying the banks closed Monday.
Yep.
And then Tuesdays, like queues all around the block. And I think you could take out 50 euros a day per bank account, and that was it. So you could access your money on your card. So immediately everyone's like, right, I'm gonna go to shops, I'm gonna buy a TV, anything I can get. And then suddenly, all the vendors weren't accepting
digital.
They wanted cash. Because they're like, all right, you can buy this TV from us. And I'm talking about like big institutions. I'm talking about like Target kind of size, Walmart, you know, these type of, you know, Cole, you know, they wanted cash because they were worried that if they had too much money in their bank. So like right now, anyone who's got an offset account with more than 250 grand in it needs to be really careful. But at the same time, it's very easy because you're like, yeah, but I'm not paying interest on it, so I'm saving money. Yeah, as long as that bank's around.
Don't you think, like a lot of people watching this, they'll, you know, it seems unlikely, and the more developed the economy in the country that you live in, you know, Cyprus, you know, I don't know what it's technically categorized as. It's
Europe.
Obviously,
it's euros.
It's developed a lot more over the last 50 years, right?
Yeah.
For example. But it's one of those things where if you're talking about, you know, that happening in Australia or the United States, people would say, nah, just, you know, they don't think that would happen.
Well, it happened in the United States. Like not long ago, I think it was in March, you know, where a load of regional banks were collapsing and the government had to step in and say, what we're going to do. And this is absolutely criminal, right? So they basically went in, it was last March, where a lot of banks defaulted and they can't just be like, here's some money, you're bailed out. They had to have an agreement. So the Reserve Bank said, we will take all of your failing liabilities, so all of your failing mortgages, and we'll take them off your balance sheet and give you the cash, mark to market, right? Which basically means that, imagine like you buy a car for 50 grand, and then turns out it's a shit car. When you try and sell it, they're only offering you 25. But then like mum and dad says, yeah, I'll buy it off you for 50 grand, right? That's basically a bailout, right? The bank made a dumb choice, or the business model is flawed.
Yep.
And then the Central Reserve Bank said, don't worry, we'll just buy all your failing liabilities. And it was only for a year, right?
I think bailout people can believe easier because, you know, if a bank runs out of money, or I think in the case you're mentioning around the Silicon Valley Bank collapse, banks invested a lot of their free cash into long duration bonds. And then when the government put up the interest rates, right, the price of the bonds fall. And so on the company's balance sheet, they became technically insolvent or bankrupt.
Yeah.
And so, you know, wouldn't have been a problem if there's no bank run and people don't necessarily panic, but because somebody put out a report, and, you know, rightly so, to show on paper a lot of these banks are now bankrupt. The government had to step in. JP Morgan stepped in, bought up a lot of these smaller banks. I think that the bailout scenario, and again we had that in 2008 as well, is plausible. But you know, the situation you mentioned in Cyprus about government taking people's money, do you see that as happening? Like as
that happened.
A bail-in.
Yeah, bail-in happened. It happened in Cyprus.
No, sorry. I know it happened in Cyprus, but I mean, in Australia or the United States.
I can see it happening.
Really?
I can see it happening. I think because... So I think either two things happen. Either everyone who has money in the bank will get a haircut, right, and lose anything beyond their guaranteed amount. And you have to remember as well, so in the US, I think they have 1.5%, the insurance underwriters, whatever, they have 1.5% of the actual value of all the deposits in the banks. So even if it all failed, the insurance haven't got the money to bail them out.
Sure.
Right?
Sure.
So what I can see happening is either everyone takes a haircut and people who have a lot of money in the bank lose a lot of money. Anyone who's got an offset account is going to lose that, right? The other thing I can see happening, that's if they have a bailout. So if they have a bail-in, people will take a haircut. If they have a bailout, it means that the government's going to print loads of money, flood the bank, and you're going to have debased money anyway. So even though, right, so I had $500,000 in my bank account, and then they had a bailout. Oh, good thing I didn't lose my $500,000, but now my $500,000 buys me half as many cans of Coke as I wanted, or half as many bars of gold as I wanted to. In which case, I might as well have taken a haircut.
Sure, and that's probably a lot more likely, right? Because it's more socially acceptable.
It's more socially acceptable until it isn't. And this is the thing with inflation, it kind of eats away at you until eventually people realize, and people are starting to realize, which is why everyone wants out of savings, you know. And now actually, this is actually the most criminal thing that's happening now. So two things. One, if you have a cashless society, because everyone's going cashless, it's technology. Cashless society, all it means, and they say it's for security, my view is that all it means is that you can't have a bank run. Because even if I try and take my money out of the bank, all I can do is send it to another bank and you know, pump liquidity into them. So, but the liquidity is still in the system, so you can't have bank runs. That's the first thing about having going cashless. I forgot the second thing.
No, sorry. So bank runs, society is moving towards cashless. What else is it moving towards?
Yeah. I remember the second thing. Yes. And again, this is absolutely criminal. So for the most part, everyone, 99.9% of people believe that the Reserve Bank determines the interest rates, but they don't. They determine the cash rate, which is the rate at which banks can borrow from them. And the idea is that I'm a Reserve Bank, I lend you money and you pay me back 2% interest, you lend that to someone else, they pay you 4% and you get me 2%. So that way the spread is...
They do set the interest rates for the overnight rate, the base rate, right?
That's right.
The base rate. But
which is what the banks pay them back at. And then the banks, they then add a little bit of interest on top to the consumer.
Yes.
So I want to buy a house, I pay my bank at the moment 7%, and that bank pays Reserve Bank 4.5%, right? So they get a cut, What's happening now, and I saw this other day with, I think it was NAB or ANZ. These are Aussie banks, by the way. And what they're doing is they're offering interest rates on homes the same as the cash rate. I think the cash rate is like 4.35 or something, and they're offering it at 4.5 or 5%. So it's very basically it's on the cash rate.
Yep.
And people are getting excited saying, yeah, I can get a house 5%. I'm like, yeah, that's 5% fixed the first 3 years. And then what? And then you're going to get hit with whatever they want to charge you at. All right, you can move to a different provider, but if all the providers do this at the same time...
You mean like lift their interest rates?
They can lift their interest rates.
Yep.
So like, what I think is going to happen, I think when shit hits the fan and the banks need bailing out, the government needs bailing out, and everyone needs bailing out, I think they're going to drop the cash rate to zero instantly. I think something has to break first. They're going to drop interest rates instantly to zero. So banks can pay back their debt cheap, and the governments can pay back their debt cheap. And then they're going to be selective of who they want to have cheap debt. So they're going to say, okay, the commercial banks will then choose who they lend to cheap. So even though they're paying, the cash rate might be zero, they might still be charging 6% on a home loan.
Yeah, or they need to be more risky, right?
Yeah, or 10%. And that's how it should have operated from the beginning. But everyone's trying to squeeze margins. So I think that's what's going to happen. They'll be very selective on who gets good interest rates, who doesn't. Of course, the banks can pay zero, and the governments can pay zero. You know, it's going to be a whole mess.
Yeah.
I just don't want to be part of it. That's why I just take this out of it.
Take some gold. What about, in terms of timing of all this? It's very, it's very difficult to time the market or know when the proverbial shit hits the fan. Like, how do you think about in terms of time horizon? Like, what if it takes 50 years and you're an old man by that time? Like, would you have been better just buying a house?
Well, I like most people, I'm itching to buy something, right? And
property or like other things?
just everything.
Everything.
I want to buy everything. I want to buy like
Lamborghini.
I want to buy another watch. I'm looking at Aston Martins at the moment, and the thing, I'll never buy a brand new one because they depreciate so. The first 5 years, it's depreciation. So I'm looking at a 5-year-old Aston Martin, and this. And I often tell myself this to remind myself why I'm doing what I'm doing. But I started looking at Aston Martins about, I don't know, a year and a half ago. And the one I wanted, Aston Martin V8 Vantage GT, was about 110 grand Aussie. And at the same time, about a month later, I bought a kilo of gold, one of these, and this was 88,000 a kilo. So the Aston Martin significantly more than the gold. Mm-hmm. A year later, I'm still looking at the same car, a year newer to keep, but like they've dropped from 130 grand to, 99, maybe 105. And my gold's gone from 88 up to 122. Mm. So now that can buy me what I wanted originally and have left over. But I'm like, why buy Aston Martin today when I can buy it tomorrow and it'll be even cheaper? Because I think there's a lot of warning signals. And the last thing that people default on is their home payments. Mm-hmm. So when the economy gets tight, first thing they're going to do is they're going to rein in, not have 2 coffees a day, take away, they're going to have 1. Mm-hmm. And then have none. And then eating out, Uber Eats every day will turn to like a trivial thing once a week, and restaurants will come down. You've seen this already. That big trip to Europe, I was going to go for like 6 weeks, maybe I'll only do 4 weeks. That trip to Europe, I'll downsize that and I'll go to, Thailand. That trip to Thailand, I'll downsize that and just go to Tassie. Mm-hmm. And it gets smaller and smaller. And then, especially working from home as well, you have your project car in the garage, your Aston Martin, you never drive it, but it's there, it drinks petrol, petrol price is expensive, cost of insuring it and maintaining it. Your partner's nagging you, why do you even have that thing? You never even drive it. But you could sell that and pay off the mortgage because the mortgage is the most important thing you've got to pay.
Yep.
Right? So what you're going to see, and I'm seeing, because I'm constantly looking at cars, and also have a car business, so it's in my job to look at cars. I'm seeing cars coming down and down and down. And I'm seeing the same car, that same Aston Martin that was 105, is now 99, it's now 94 and a half, it's now 89. And then I'm looking at my gold, and my gold's 88, right, now it's 92, now it's 98. Why buy it today when I can buy it tomorrow for cheaper? Mm. So, and I get this conversation a lot, with a lot of friends and family, when are house prices going to come down? I was like, well, they are. No, they're not, they're supposed to go up by 1% next year. I was like, okay. How much has the price of eggs gone up by? What's your wage gone up by this year? Most people get the standard, pay rise 2% each year or whatever it is. Mm-hmm. Nurses just got a big 30% bump in Australia, and everyone's wages are going up, cost of milk's going up, cost of everything's going up, and houses only went up by 1%. Relatively, it's actually coming down. The gap between my wage and the house I want is actually getting smaller. Mm. And it's going to happen even more, because I think a lot of investors now, they're buying a house hoping it's going to go up, but they're realizing they're not getting the capital gain that they were hoping.
But then you think property, certainly in Australia over the last 4 years, since obviously there was the massive stimulus injection in 2020, and property prices have gone up in the realm of around 50%, right? Which I don't think wages have gone up as 50% for most.
But does that not worry you? The fact they went up so quickly, are you not worried that loads of people during lockdown had nothing to do with their money? You can't go out, you can't spend it, government's giving you money, all you can do is save and order takeaway. So, and what did your parents do? Or what advice would they give you if you had lots of savings? They'll be like, buy a property, because property always goes up. It's old investment that has worked. Yeah. Our generation, I don't think it's quite the same. I think from an investment point of view, the capital gains, I think, is not things go up and down and oscillate, and you can't time the market and pick the tops, pick the bottoms, but you want to pick it when it's asymmetrical. I can see property going up 1 or 2% and then coming down 50%. So the risk to reward to me doesn't quite add up, and the fact that everyone's jumping on it, everyone in Australia has got 2 properties, 3 properties, it's investment, but an investment as an asset, the definition of an asset is it puts money in your pocket. If you're buying a property and it's costing you to own it, and the capital gain and the maintenance and the running doesn't cover the income from it, you're losing money.
Yes, it can be a cash flow liability, but a lot of people buy it because, they, at least historically, right, as to your point, property's gone up somewhere between 7 and in good cases 10% a year. But that seems to be slowing down now because stimulus is slowed. But
and also I think it's a population thing. Like the population in like the 1930s was 2 billion. Now it's like 8 billion. So the population's like blown up. And again, in Australia, they say, there's a massive property struggle and there aren't enough real estate, there's not enough properties, we need to build more, but the construction industry's gone out. Construction is failing for the exact reason why I said up interest rates, everything's expensive, they can't afford to run, they have to shut down, which makes property more expensive. But like there's 9.5 million homes in Australia and a population of 27 million people. So there's one home for every 3 people. That's not including the fact you have like families and kids and old people in homes. And so there's enough properties. Plus the CBD in the next 5 years is going to be derelict. It's going to be empty. No one's going to live there. Everyone's working from home. They're going to try and force you to go back to work. And they're going to probably bring in some like work safe bullshit where like people come to your house to make sure your house is safe for working in. Right, I'm sure they're going to do it. Right, it's an easy money maker, easy way to get people employed and encourage people back into the city. I'm surprised they haven't done it already. They're going to repurpose the CBD, right, and they're going to try and make it like luxury, affordable apartments. The truth is, everyone wants more properties, more affordable property, but like not on my street because I don't want my price to go down. Right, so it's by design that they want to be a housing crisis. I can't see it, and I think there's going to be a big correction soon. Unemployment picks up, landlords will struggle to fill their vacant properties. And as things get tight, like for example, me and my partner, like we lived in separate places. And then we both moved in together, so our rents have halved. But now her old place is empty. The landlord has to fill that. And as people become unemployed, the cost of living goes up, more people will move into house sharing and that type of thing, which will then free up a lot of apartments and real estate, which will then make it a renter's market. If landlords don't lower their rents, landlords can't lower their rents because they have their own mortgages to pay and their own cost of living to put up with. So that if anything, they're raising their rents. So now you buy a property which the rents don't cover the mortgage, and there's a lot more availability of them. I think a lot of landlords are going to sell because it's not worth the hassle. And when they all sell at the same time, because like I said, everyone wins at the same time, everyone loses at the same time. When a lot of like the retail landlords sell at the same time, house prices are going to come right down, making it more affordable for those who, like you'd always meet equilibrium. And I think the pendulum's swinging one way, and it's going to swing back the other way. And the more it goes one way, the further back it's going to go the other way. So how I'm positioning, I just want to be, I don't want to have anything that's going to cement me down. I want to have flexibility, options. I want to be mobile. I want to be able to, if Australia turns shit, just be like, all right, chip off to UK, chip off to Europe, got a Cyprus passport. Part's got a Russian passport, might go to Russia, who knows. But like, at least you have the flexibility, and I think liquidity will be very, very important coming up. And I think real estate is the least liquid thing you can have.
Yeah, it's definitely, it's hard to pay for things with your house.
Yeah.
For sure. So let's jump into the third section. So we've discussed a little bit about the local economy here in Australia. In terms of what we're seeing, worsening economies in some cases, a lot of focus is placed on the US. Do you think the US is really in a decline? And if so, who is the new superpower? Because, if you look at China at the minute, they've got their own spiraling debt problems, and, arguably they're in a worse debt situation than even the US. Like, they've got a property bubble which is imploding, and people losing their houses, buildings that have been built and nobody's living there. They have ghost cities. So,
yeah,
who is going to be the new superpower of this, changing world order?
It depends how okay. America's on the decline. So is China. America is like the consumer of the world, and China is like the factory of the world. So like, if I stop buying stuff, then that factory is no longer needed.
Sure.
Right? And So China needs to like very quick transition out of manufacturing and into like innovation and things like that, which they're doing, right? Again, you have a real estate problem in China because there's just too many people, not enough real estate, yet there's demolishing ghost cities, exactly like you said. So, it makes you wonder, everyone's super levered up. And I think when all the debt is due, the countries with the least amount owing and the largest amount of real money will be the ones on top. And I think Australia is up there. And even though Australia's got like a Western head and, they're into consumer culture, like I said, they're literally a country the size of a continent, away from the world, so you don't have to worry about protecting borders as much. And we have like the biggest gold reserve of like any country in the world, and a population of nothing. Per person, if they were just to get the gold in the ground and be like, right, let's give it to each person. We are like, Australia could do what the Middle East did with the oil.
Yeah.
But they do with the gold.
Yeah.
I think the country that's going to prosper is the country that's going to boycott this woke ESG bullshit first.
Okay.
Right? So the country that says, and you see it already happening, like people talk about left and right leaning and governments. I think they're confusing left and right leaning with nationalists and globalists. So the country that turns around and says, you know what, we don't want to be funding other countries. We want to keep money to ourselves and develop ourselves. Right? We want to be selective of who we bring into our country, owning the skill sets that we need. I think those are the countries that will call a spade, are the ones that I think are going to prosper in the near future. And joking aside, like my partner's Russian, and I often tell her, like, I think Russia's going to be the place. Like they call it as it is, right?
Sure.
There's like people know the difference between a boy and a girl. Like basic shit, right?
That's a good starting point.
And I'm not saying it's perfect. Every country has corruption, and some countries it's a lot more obvious than others, and but essentially, like that country, it's got huge gold reserves. It's got huge, agriculture. It's got huge mining. It's got huge everything. It's self-sufficient. You can sanction it to the ground, and it's still there.
Yeah.
Right? Like, how do you beat that? If the rest of the world turned around to America and said, right, we're cutting you off. We're no longer transacting in your dollars. America's finished, like instantly gone. China, if the whole world said to China, we're not buying your shit, China's finished.
Right? At least with the case of China, as you said, they are the world's factory. So on the one hand, if America or people stopped using the dollar and or they used it a lot less, it would be reasonable to expect that the dollar would collapse because of the 35 plus trillion in debt that's unrepaid. But at least with China, they produce a lot of things. Like America offshored so many of its like manufacturing capabilities overseas, which was great if you're a consumer economy, because you can let the Chinese do it for cheaper, let the Indians do it for cheaper, right? And you reap all the benefits as an American and get lower prices, more choice.
Did you see what's happening in the UK now? So in the UK, they're trying to like cut down on farming certain things because they don't agree with a certain type of fertilizer, and this fertilizer doesn't meet regulations. And I think Europe the same as well. You see in Amsterdam, all their trucks, all their tractors are like blocking up the roads and stuff. And I think the crop that they're trying to get, it's cheaper to get it from Brazil. Yeah. So instead of them growing it in the UK because fertilizer problems and it's against regulations, they buy it from Brazil. But in Brazil, they have no regulations on what fertilizers they use. So they're using the same shit fertilizer in Brazil, but it's cheap, and they bring it here, or to the UK. I
think it's the same how Australia refines, or it digs out lithium, but they send it to China to be refined because it's a polluting process. So rather than breach their local regulations, you give it
palm it off. You do all the dirty work, And then like...
You get the carbon emissions, thank you.
Yeah. And then we get the carbon credits because lithium is going into batteries and sustainable. Well, yeah, it's true. Like it's like actually criminal when you think about how it's run. But yeah, it's what I think is going to happen now. I think we're going to see a lot more polarity and civil unrest. I think we're going to see with institutions, they're going to start looking for more risk-off assets. Whereas before everything was going up and, I'm taking a gamble. Now it's like, unless we're sure, unless there's, if it's high risk, we want to have a lot of interest on our, and amongst people, I can see, like I'm in Australia, I can see the phrase Aussie jobs for Aussie people starting to come up. I think there's going to be a lot of more like, why are we bringing in foreigners? Why refugees? Because that's what they do. They bring poor people and foreigners, right? They said that at the end of the Big Short. And I can see that happening. I can say, there's going to be unemployment like it's crazy. And there's a skill list for immigrants in Australia, for people moving to Australia, for migrants. And they're going to say, why are we not doing these locally? Why are we not bringing local people? I can see that happening. India, I can see that being a huge population boom. I think India have a lot of silver, a lot of gold. They have a very young population. I think 2/3 of their population is under the age of 30.
Yeah, they seem to be in a good spot, like
Something
demographically and growth-wise as well, right?
Yeah, it's just a shame that the country is just so fucking shit. Like, man, I've been there and people were like, oh, India's really beautiful, you should check it out, I went to India, I don't know how a whole country can smell like a landfill. Right, and it's just dirty and there's like, all the sides of the roads are covered in litter. Like people are shitting on the street in front of you.
Yeah.
And because I was white, walking through India, everyone's staring at you as well. It's just like, I
guess they're coming from, more humble roots, whereas, maybe the UK or the US was there a while back.
No, I get it.
Yeah.
I do understand like where they're coming from and it's not, but like there's a long way to go is what I'm saying, But at the same time, it's so cheap to, manufacture in a environmentally unfriendly way that they do it. And in the UK, they pay for it. Like, so in the 70s, everyone hated Margaret Thatcher, or the 80s, late 80s, because she was like, yeah, we're not going to insource all of our steel production now. So all like Sheffield, all the steel cities are like shut down. They based a movie on it, The Full Monty, and they outsourced it to India, Tata Steel and all those kind of ones. It's cheap, it's dirty. I think the opposite's going to happen. I think people can start bringing things back inside.
Yeah.
In-house. I think America, and that's why I think Trump will be good for America, because he's very much like, stop proxy wars all in these shitty countries. Let's just like focus on America, bring back oil production, bring back manufacturing,
Drill, baby, drill.
I don't agree with it necessarily, but I think it's the way to go. Like you can't keep a globalized network when everyone's starting to become more nationalistic and,
On Bitcoin you can.
Bitcoin you can. But yeah.
So closing questions. What will, society look like in terms of how we transact in this more nationalistic world that you're describing? How will people, you touched on it before with sort of the United Nations of gold, but how do you imagine that we trade amongst ourselves, not just internationally? Is it going to be people walking around with these little gold things, or are we going to, be using certificates of gold and still, using a locally trusted entity? Like, what does it look like? Is Bitcoin in that picture still, or do you think it fades away? I think
there will be a blockchain element to it.
Okay.
I think in the very, very near term, when money hyperinflates, I think two things will happen. I think banks are getting ready for this now. So they're already introducing or developing their CBDCs, central bank digital currencies, ready to deploy. As soon as the civil unrest, they can be like, all right, you can change your, 20 grand in savings to 20 grand of CBDC, the digital dollar.
Yep.
And if you do it within the next 3 months, we'll give you $500 extra. And people will be like, $500, yes. And they'll do it. And then now they're on a smart money central bank can survey where your money goes, how you spend it. Have you met your carbon footprint? If you've eaten too much meat, We're not going to let you spend any more.
Do you think that will happen?
I think so.
Yeah, really.
I think so.
I could imagine that happening in communist or more communist countries like China. China, it started to roll out. They've got the ECNY. Hong Kong's got the EHKD, Hong Kong dollar, which are CBDCs. But in some states in the US, they've already rolled out legislation to ban the introduction of CBDC, where even if the federal government tried to roll it out, the independent states would, not adhere to using that. So, do you think all countries will roll out CBDC or just some?
I think they'll try. I think this is their opportune moment. If they're going to do it, you want to make everyone struggle first, make everyone desperate and thirsty, and then it's easy to feed them poison, right? So I think that's what they're going to try and do. And I think having a decentralized money is the way out. So Bitcoin. Which is Bitcoin, it's gold, it's, if someone's willing to accept baseball cards, then but it's an alternative. I think in the near term, people are very good at creating medium exchange quickly in time of desperation. So, for example, during COVID, suddenly toilet paper became a commodity, right? You go to prison, people know in prison know exactly how much a cigarette's worth, right? In terms of labor, in terms of, dessert off the, So people are good at that. I think people will turn to something that they know will have or hold its value at least. And I think, Bitcoin, silver, gold, I think they're transacting that in immediately. I think in the medium stage, I think they're going to introduce some sort of blockchain, some gold-backed blockchain, and I expect it to be done by a big organization like the BRICS, where they're going to say, right, we're going to create a blockchain. Each country will have its vaults. We're going to have them audited regularly by other member countries. And if that country doesn't have what they say it's going to have, we're going to, sanction them, or we're going to exclude them from our group. I think trade, they've got the Belt and Road Initiative that's already starting to kick in place, which is a big trade route that goes literally across the world, minus America, because they don't want to trade with America. Australia, New Zealand are part of it. all the Middle Eastern countries, Asia, down through Africa. So you can see where the trade alliances are going to go. You can see the Eastern Bloc and the Western Bloc starting to separate. So Europe, America, Canada, they're doing their own thing. And then the Eastern countries, Middle East, Asia, China. The BRICS, basically.
Yeah.
And Australia's an interesting one because Australia's, they've got a Western hat on, but also they're sitting back and they're also a little bit savvy when it comes to...
Our major trade partners are BRICS countries, right? They're the one buying all the iron ore from us.
Yeah, exactly. And like I said, Australia has the potential to become like the Middle East if they just pull their finger out their ass and realize what they're sitting on.
Yeah.
So it'll be interesting to see. So part of me, I almost... So you buy gold and metal as I wouldn't call it investment, I would call it an insurance. I hope it doesn't go up. Like if I told you tomorrow, my gold's got up to $9,000, that's what I'm scared of. I like my life as it is. I like the fact that it's relatively crime-free where I live in Melbourne. And I go to work and I know that I get paid this much. And I know that my money can buy me that much stuff. I'd have to reprice things in my head every day. There's not, I like that. I don't want that to change. Unfortunately, it's out of my hands. So you buy the metal as an insurance. And I'm sure with the Bitcoin, if currency was working, there would be no need for it.
Yeah, I agree. Yeah.
It's a way out. I think in 2008, that's when everyone expected, but then, they came out, started printing money. The quantitative easing started, QE. And then it's now how far down this road can you kick this can?
Yeah.
And every day it gets further and further. Things are looking so much more out of whack. Where the price of certain assets,
property is ridiculous.
Property, employment, unemployment, types of employment. Everything seems so far apart now. It's only a matter of time until this house of cards falls.
So last question, what is something that you are aware of or feel like you understand quite well that you think, in addition to what we've discussed today, that people should be more aware of or that they would benefit knowing more about?
I think if they're watching your podcast, I think a lot of them, people already know what's up. Mm-hmm. They understand the investment, they understand. I think people should be aware of what's real and what's fake. And this goes with everything. And don't listen to what mainstream say. Watch what they do. If bankers are telling you, have dollars, but they're hoarding gold, I'll be hoarding gold. If, when you buy a property, a mortgage broker will tell you now's the best time to buy a property, but also tell the seller now's the best time to sell a property on the same day. As long as they're getting their commission. Then you ask them, do you own any property? And they'll be like, no, maybe. It's none of your business. I would listen to people who have skin in the game. Mm-hmm. I would weigh up the biggest picture thing. I've got a lot of friends who invest in Bitcoin, or not Bitcoin, crypto, or gamble on horses, whatever it is, right? Yep. And they would, I'm not saying that Bitcoin and gambling horses are the same, by the way. I'm just saying they'll invest in something and they'll be really happy. Oh, my investment's gone up by 20%. Like, cool. So how much money did you make? Oh, I made $100. Nice, so you're buying around.
Yeah.
Keep doing what you're doing and eventually you'll still be where you are today. Mm-hmm. I think you got to position yourself in a big way to make big gains. But you got to be very careful how you position yourself. I think a lot of people are going to lose everything.
Mm. And how do you position yourself in a good way? Apart from, let's say, buying gold or Bitcoin, like is it more around increase your earning potential now whilst you're young? Like what? Starting a business.
I think grow your skills, and I would grow skills that require human interaction, not so much computer-based. Not computer-based. AI is a big thing, and it can take a lot of jobs, but AI can't negotiate. Mm-hmm. It can do like a weighted risk analysis, but it can't sit and have a conversation. So I think that's important to have those skills. I would also not hurry to buy anything. I think a lot of baby boomers are going to be retiring, selling businesses and things like that. So if you want to start a business, I would buy one. I would try and get businesses in different sectors so that you're diversified. So for example, I've got a business, I have a fleet of cars that I rent out, and some of them are nice, I've got some Porsches, some Range Rovers and stuff, it's cool, but also I've got gold. I've also got a day job with a salaried income, which, at the moment what's happened is a lot of people are cutting back on their weekends away to the, spa towns and stuff like that, and their weekend retreats. So they're not renting my cars as much. So I've noticed my cars aren't renting as much, and now I'm like, maybe I should reduce my fleet size. So that side of the business is not doing well, but because the economy's struggling and government's printing, which we expect with the struggling economy, the price of gold's gone up. So actually, net, nothing's changed.
You've diversified well.
Yeah. And then having a day job, right, is great, because at least with a day job, I know at this, on this day, at this month, I get paid this much, and I know that my rent is this, my bills are that, and my grocery shopping is this. So I've got different income streams. Ideally, a government job is a good one to have because government have infinite money, at least until it hyperinflates into nothing. Yeah. Right?
Which is everyone else's money too.
Which is everyone else's money. When they inject money into the system, when they inject it in, when they have a lot of debt, private debt, when you up interest rates, it's good for killing off debt within private industries, but it's very bad for killing off development in government industries. So at the moment, it's a massive government deficit, which is the main problem. But essentially, I work on major infrastructure projects for government, so
So you're okay.
I know exactly how easy they waste money. I know what my charge-out rate is. I know this job could have been done way cheaper, and I know that we're going to revisit this again in 5 years' time for no reason. You know, it's sad, but also, you know, and
don't downplay it though. I mean, construction and engineers, you know, yes, you build stuff, but that stuff enables, you know, prices to come down. You know, transport improves, everything improves.
Yeah, 100%.
So, you know, I think, you know, the work you do is obviously very valuable to society. Otherwise, you wouldn't get paid.
It is. But once upon a time, you'd have one engineer calling the shots. One engineer called Brunel would be like, this is how we're doing it, and it was done. Now you have like so many engineers, so many stakeholders. You've got so many government bodies that don't need to be there, you know, telling, you know, and it's almost overkill, but it creates jobs. You know, sometimes I go into really heated meetings and it's going back and forth, and I'm getting frustrated. I'm like, you know what? This one problem has kept me in a job for 3 months.
Yeah.
Right. Fair enough.
Yeah.
You know?
Yeah.
You want to argue for another 2 months? All right, let's do it.
Yeah.
You know, What else?
No, I think that's good point. So basically, you know, diversify not only your investments, but
they've got to be in
income.
different sectors. So like, for example, diversification for me doesn't mean I'm going to have some Bitcoin and some Ethereum. It means I'm going to have some Bitcoin and like some real estate.
Yeah.
2 independent things.
Yep.
Yeah. And absolutely make sure you're in good physical shape. You know, so easy to...
Good investment.
100%. Like, you live once, you have this body once. You know, every male, I think, should be at least able to bench press 100 kilos. At least once in their life. Right? Like,
regardless of body weight, or?
Okay, maybe, all right. I mean, it's unfair to have a
50-kilo guy.
Yeah. No, that's fair. But like, it's important, you know, whenever they interview these, you know, hyper wealthy people, they tell you, you know, money doesn't make you happy, but it comforts you when you're sad. But like, the true happiness comes from the relationships you build with people and your physical health. If you're, you know, struggling to survive because you can't walk up the stairs, you're out of breath and you're lethargic and you can't move, and you know,
you wouldn't switch places with Warren Buffett right now.
Absolutely
even
not.
though, you know, he's a little bit richer than us.
Exactly.
Yeah.
And at the same time, you know, there are lots of people who have like, they're so focused on making money that they forget to, you know, keep in touch with their friends, or you know, their friends aren't good enough for them anymore, or, you know, and also you have to remember, like, time is finite, you know, as far as life goes. And so if you've got a bit extra cash and you buy an Aston Martin because you're young, and you know, you got to do young dumb stuff.
Don't
when you're
judge
young.
him, basically.
Yeah, don't judge me. You got to do young dumb stuff when you're young, right? Like, so.
Cool.
At the same time, yeah, that's the take home.
Great. All right. Well, thanks, Alex, for joining us. And yeah, if you like this podcast, this show that we've done, please like and subscribe to the channel. We appreciate it. And Alex, thank you so much for coming on again. It was awesome.
Anytime.
Cheers, buddy.